story we have been tracking consistently on this show and on ET Now, the pace of recovery of the Indian economy after the huge hit it got from the COVID-19 pandemic and an even huger hit from the lockdown, one of the harshest lockdowns that was imposed in the country on 24th March. While since the lockdowns have ended and the economy has started opening up, there has been a consistent upward trajectory, which was expected as things opened up. Initially, it was thought that this was just the impact of activity which was stalled now being allowed. Then there was the thought that some of this is pent-up demand coming in, people going out and making purchases and spending money that they couldn't earlier. But could it be even better? Could it be even more? Now, a host of brokerages just about 2 months ago in September actually had revised their outlook on how much the Indian economy will shrink this financial year by quite a bit. Two of them at least have now come in with another revision where they think that the Indian economy will contract a little less than expected earlier and will grow a little more than expected earlier next year. Does this mean and does this show that a tide has turned? It's not just these two brokerages, which is Moody's and Goldman Sachs. The Reserve Bank of India as well in its communication last week, apart from saying that India is now in a technical recession because we will be contracting for 2 quarters in a month, has talked about how they think that the kind of demand we're seeing is not merely pent-up demand. The high frequency indicators also are continuing to be pretty consistent. So what does all of this mean? To get a bigger view and a wider view on this, I'm joined this evening by Pronab Sen. He's former member of the Planning Commission, Sachchidanand Shukla, Chief Economist of M&M, and Pooja Mehra, author and journalist. Welcome to all of you and thank you for speaking with us on the show. Mr. Sen, let me begin with your take. We've had the opportunity of tracking where the economy is going quite a few times in the last few months. Where do you think we stand right now?
Pretty much on predictable lines. One hates to say this, but as far back as in May, what I had said is that the first quarter would show a negative growth of upwards of 30%, but the second quarter and the third quarter would show you negative growth of less than 10%. And that's roughly where we seem to be at the moment. But if those projections continue to be correct, then the bad news actually comes later, probably early next year. The first quarter of next year, in any case, the growth rates will look great simply because of the base effect of this year. But second and third quarters may give you a very nasty shock. So the belief that turning the corner means that it's a straight road after that is completely misplaced. You can turn the corner again. And that is something we need to be wary of, and it's something we need to plan for. Now, just because brokerage houses have projected some slight improvement in their growth forecasts doesn't really mean very much. They are also working with models, as both Sachchidanand and I do. And it then becomes a question of whose model is better. But at the moment, my word of warning is we are along a very, very expected trajectory. And let's not get carried away because the future can spring a very nasty surprise.
Okay, so Mr. Shukla, your take, is this along expected lines or is there a faster than expected recovery? Because that's part of the narrative, right? Especially when you talk to corporate India and you talk to various companies where they say that they're seeing their output levels go up faster than expected, their demand coming in better than expected, corporate results have improved better than expected. So are we on predictable lines? Or have we improved faster than expected, especially since, say, September?
Let me say that some parts of the economy, the data has really surprised. There is no question about that. If you see the pattern, when you look at the global numbers, we have seen some bit of upward revisions to growth forecasts. You look at, say, IMF or even private forecasters. What they did was Q2, when activity levels went up, you saw an uptick in the growth numbers or the projections. India has also, so if you look at September, October data points and some data that we have for November, we are seeing a slightly faster than expected, say, rebound in some of those data points. So I think for Q2, India's GDP numbers will probably be revised slightly upwards, and therefore forecasts are likely to play catch up in terms of upward revision. The other thing that I want to mention or highlight probably is this surprise has largely come from the manufacturing side. And remember, India is a services economy, right? We're still not really capturing that part very well, nor is activity level really normalized to even some fair degree. If I were to tell you some data points in terms of what is happening on the IIP side. So I'm just using the output side and not the value add side. If you see the durables part, we are 104, 105% of pre-COVID levels, right? If I were to look at non-durables, and this is data for April to September, and obviously October has also surprised. Non-durables, again, we are 97, 98%. The other surprise has been capital goods, which is close to 90%, and infra and construction, which is again close to 90%. So to be exact, it is about 88%. Some bit of the capital goods is also owing to things like tractors, harvesters and stuff, where the demand has actually surprised on the upside. But having said that, I think, will this sustain is the real question. And second, on the services side, we have still not really seen fair degree of unlock or the unlock really manifesting in economic activity or the services activity. And I think that really is going to weigh on the growth part. Second, on the manufacturing and the output data that I cited, I think once the festive season is over and once that pent-up demand plus festive season and inventory push is out of the way, we'll really have to see whether how long it sustains. Apart from that, I think going forward, what Dr. Sen said is really important. So let's probably shift our gaze a little ahead. If you were to look at it from a 12-month ahead perspective, will we see this kind of recovery sustain? I think one rude lesson that we have learned from global, say, market or economies is that we can't be so sure of linear trajectories as long as the virus is around us, vaccine or no vaccine, right? So I think we can't be extrapolating linearly. The second bit is also, we do have a fair bit of, say, room on the fiscal side. How does the government really use that? And how much does the private sector really sustain this activity will determine whether this sort of trajectory sustains and whether we are back on the recovery path. Like Dr. Sen said, this is a once-in-a-century pandemic. Therefore, the scarring is going to be huge. A lot of the sectors that we don't really count properly or see properly, the MSME, the informal sector, we still don't have a good handle on. So I think the best way to put it is probably that this is still an uneven recovery. It is not really complete. And we're only looking at partial data points, especially the output side, especially the manufacturing side. Let's see the services part and we can be surer of it.
You know, some tangible data will come in towards the end of the month. So the wait is about less than 10 days. And then perhaps we will have a clearer picture. And important point there that Mr. Shukla makes is about how COVID-19 behaves. I mean, just today and up ahead on the show, you'll see a report of what's happening in Ahmedabad, where they've decided to impose curfews from tomorrow because of a spike in cases. We all know what's happening in Delhi. Pooja, how do you look at the situation right now? And of course, there is cause for optimism. People want to be optimistic, let me put it that way. Do you think there is enough cause or reason to really believe that we have improved better than expected? Anecdotally, it seems like that.
Tamanna, I'm just going to almost repeat what Dr. Sen and Dr. Shukla have said before me. And you spoke of brokerage houses and slight optimism there, or let's say improvement in the optimism levels there. I want to bring to your notice a column I read yesterday by Sajid Chenoy of JP Morgan, where he gave three data points, which I think are very sort of important to look at. And he said the same thing. He said that while there are some silver linings, we can see right now, but it's important to be patient on trying to figure out how these will translate going forward and whether this pent up demand will sustain or not. And the data points that he wrote about are, how whereas people are saying there's increase in demand for the auto sector for vehicles, he said that the registration levels are still 20% less than what they were the same time last year. Similarly, CMI data shows that unemployment level is still 2% higher than it was before COVID, and the demand for MNREGA jobs is still much higher than what it was in October last year. So if this kind of stress is there, it will at some point translate into GDP numbers, and all these projections. I'm not sure how much they have factored in this kind of stress. So there are some signs of there being a slightly better than what was expected pace of recovery, but all this hard data points tells us that we've got to be very patient in looking at how this is going to pan out. We can't. There's just too much uncertainty, and we can't assume that it's going to be better than what we had thought initially.
Well, let me go specifically then, Dr. Sen, to what you said in your first response, which is to look out for, the second and third quarter next year, and we could be in for a bad bout of news then. Could you elaborate on that? What are your concerns specifically? Like you said, quarter one should look good because of the base effect. You've dropped minus 24% this year, so quarter one will automatically look better. Why do you think it will get a little patchy from then on?
Let me begin by sort of dissecting one of the really positive data points that has come out, which is the bottom line of corporate India. And a lot of people are citing how profit growth has been very strong. The point is you need to break it down. And when you start breaking it down, what you find is that the top line, which is a reflection of demand, mind you, it's the top line which reflects it, is down. The bottom line has improved because there's been an enormous compression in costs. And the principal element of cost reduction has been the lowering of the wages and salaries bill. Now think of what that means, is that corporates have actually taken this opportunity to pass on the burden of the top line degrowth onto the workers. And that's improving their profitability. But the fact of the matter is that when you look into the future, it's the income of the workers which becomes a part of your demand. It's not the income of the people who own the companies who are getting the profit growth. These are disquieting because the problem that we are looking at is inherently a demand problem. And a data point that's been cited as evidence of India having come out very strongly, to a skeptic like me, suggests exactly the opposite. The problem may actually be made worse than I had expected.
What would you make then, Dr. Sen, of high frequency indicators that are being cited as evidence that things are better, whether it's Google mobility, or whether it's the PMI index, or whether it's GST collections, whether it's electricity consumption? What about things like that?
Look, all of these are linked to each other. Mobility, of course, is the most interesting because the mobility one is the one which I think is telling you about a pent-up demand we had never talked about, which is the sense that all of us have had of being stifled sitting at home for 3 months. But so let's leave that aside for the moment. But the others are all kind of correlated. The GST increase. So think of what has been happening. The increase that has been taking place in GST, right? And there's been a fair increase. Is essentially being driven by the fact that it is the companies who were GST compliant and were paying GSTs, they are doing better. But the pandemic has hit economic activity across the board. The smaller units who are not GST paying, so they are not showing up in the GST figures. We don't know what's happening there. But even within the GST, one needs to be very, very careful about GST collections on one hand, and the number of companies filing GST on the other. At this point in time, to my mind, the more important is that how many of the companies who were filing GST last year have stopped filing this year. If that number is large, then we should worry because that is giving us an indication of how much capacity of the economy has actually gone down. So treat these high frequency figures. And Sachchidanand made such an important point. And the problem is a lot of people don't seem to understand this, that economics is not linear. You will get ups and downs, and some of these are predictable if you think it through. But if you say that tomorrow is going to, if today is better than yesterday, then tomorrow will be better than today, is bad reasoning in economics. And we should not be doing it. And I'm afraid we are getting caught in that trap.
So then, no, sure. So, Mr. Shukla, let me take that thread forward with you because a lot of projections which have come in for India for the next fiscal are inherently better. And again, one might argue that's because of a lower base that we will see. But does that show that there will be a stronger recovery? When you say we cannot see into the future in a linear fashion, can we at least see as far as 2022 and the next fiscal year and how that may pan out?
Tamanna, I think the right question to ask is what happens beyond 2022? Because like you saw, if this year is going to be say -9 or -10, next year, a large part of that number that we are going to talk about or the recovery that may seem panning out is going to be statistical, right? So we have to see through that statistics part. I think what will happen is that this year has been far easier in the sense that because this was such an unprecedented shock, there was huge fiscal support, there was huge monetary support, there was a liquidity push, forbearance, and everything was done to contain the damage. Now next year, and what you have left is just statistics. We will have to see to it that we avoid premature withdrawal of policy support, right? So just think about it. I mean, just to make that example easier, globally, there has been about $16 trillion pumped in. In India, the RBI has done about 9 odd trillion rupees worth of liquidity support. And your deficit has, say, doubled in a short span of time. But I think we need to therefore see that what are the sustainable drivers of growth going forward next year. So if you look at that Keynesian equation, which everybody sort of understands, C plus I plus G, the consumer is not really going to be in the pink of health, right? I mean, we are seeing that there is precautionary savings, there is concern on incomes, etc. Investments or capex, I mean, we all know, balance sheets have been in trouble. People talk about 3 or 4 balance sheets in India being in trouble even before, say, COVID. And next year, after having doubled your fiscal deficit, can the government really support growth going forward? So if you think of growth next year or thereafter, coming from some sustainable drivers. These are the three, and then there is net export. So global demand again is is a question mark, right? I mean, you have seen the second wave being so vicious in Europe and US, and people believe that this is probably going to be the worst winter in terms of epidemiology, etc. Therefore, I think even there you can raise question marks. So what I'm saying is, next year, let us discount it as largely being statistical. Let us focus more in terms of what can sustain, what drivers can sustain this growth. To me, it looks like policy support. There is absolutely no question that the private sector activity that we've seen, the IIP data that I have cited, say a minute back, I think a lot of that reflects some one-off factors, right? I mean, a lot of policy push, festive season, pent-up demand, etc. Next year, we'll be really struggling to see sustainable drivers for this momentum. And therefore, I think Dr. Sen really is doubting on the second or third quarter number as to where the push will come from. And I think that is a genuine worry to have. But I would not really be so pessimistic. In fact, I would urge you to look at it beyond 2022. And that really, to me, is the story. I mean, the medium-term growth trajectory, how quickly can we go there? How sustainably can we go there? Should be the question that we should be asking ourselves, rather than just getting caught into that -10 going to +9 or +8. I think that is something that we shouldn't be trapping ourselves with.
Yeah. I mean, those headlines will write themselves when it happens. We all know that. But those who follow this show closely perhaps will be able to see through it. But interestingly, an Oxford economics report talks about the pain continuing for India up to 2025, with output being at 12% below pre-virus levels. Pooja, I want to ask you though about the fiscal stimulus. We've seen the third tranche of it just last week at 2.65 lakh crores as a, dressed up as a pre-Diwali sort of announcement, but it didn't really lift moods. The sense was that it was repackaging of some of the old stuff. Do you think that a fiscal stimulus is what will sustain this kind of pent-up demand and growth? Because there seems to be no real mood to go out and give primary aid and direct aid to ailing sectors and segments of the economy.
You're right, Tamanna. I mean, even if there was going to be some sort of, transfers, let's say, compensatory transfers to the sectors that are worst affected, which is tourism and travel, what will that do? Will that enable those companies to make sure that they are able to bring back lost business? I don't think so. Will people start flying, anytime soon? It is not, definitely the number of flyers on airlines is not going to return to the pre-COVID levels anytime soon. So sector-specific stimulus, even especially in services sectors, may not at this point in time help that much, because there is a change in consumer behavior which cannot be revived simply by providing stimulus. I think what needs to be provided is maybe relief, especially relief where recipients of that relief are not going to save the money provided to them, but would instead spend it in the economy. That kind of government spending will help. But that said, I think government is already spending quite a lot. I mean, look at the wage bills. There has been no reduction in government salaries. There's just a freeze on the dearness allowance. In fact, government-owned banks are going to, pensions are being revised upwards. All of this spending is, I think, maybe linked in some way to this pent-up demand that we are seeing. People are now not worried that their salaries or pensions will be reduced, earlier because of the DA freeze. That kind of worries were there, and I think that those worries have now gone away, and that is what is also sort of making people spend a little more the discretionary spending. if this continues, then that discretionary spending may not, may sustain. I don't know how much more government can spend. It's already spending quite a lot.
Yeah. That's the thing. The information comes in drips and drabs, right? Like a lot of companies or major corporates, at least, reversing all of the pay cuts that they had put in place, things like that. If you speak to job portals, they say that hiring levels have gone up. So it's all a bit of a mixed bag right now. So far seems good, but I think the big key takeaway from this is keep an eye on what happens by the second quarter of next year. That's when the challenges will really begin to build up and the pressure to actually sustain.